Good morning, folks. Welcome to Almus Market Mornings, where we bring to you the latest updates around financial markets. I'm Shikhar Garg, your host, and with me we have our interest rate, money market, and the fixed income guru, Mr. Pankaj Rathi, today with us. Now, Pankaj, on our listeners' behalf, I do have a question before you begin your commentary today, and it's on the overshadowed potential rate hike topic. Now, we've been hearing a lot, and before this whole geopolitical drama began, it was a burning concern for everyone in the market that there are potential rate hikes. So, I just want to understand what are the market participants doing or expecting on that front, and if we can have some more light thrown on it. Thank you.
Thanks, Shikhar. In the background of an uncertain scenario due to this geopolitical situation of Russia-Ukraine and a continued higher inflation reading all across the world, market is certain that the rate hikes are coming. They keep changing the probabilities of those rate hikes. Now, interestingly, what we saw on Monday morning when US market was not there, market had priced some way that the rate hikes will not be there at 50 basis rate hike will not be there in the month of March. But when US market came yesterday, they dealt with fixed income. The yields have gone higher, 6-7 basis from a previous close and almost 10 basis higher than the day low. What a simple statement from a Fed governor had changed that probabilities again. Now we are seeing a 35% probability of a 50 basis rate hike in the month of March. So market is believing that rate hikes will be there. Exact magnitude and timing would be different, but market is very, very certain that we will have from a Fed that we will have at least 125 to 150 basis rate hike in this calendar year itself.
Okay, so that's pretty good. What about rest of the things? I mean, what are you expecting out of currency, and what are the things happening around the world?
So yes, I will be covering the usual commentary which we cover every day. So basically, coming back from a long weekend, US market players found the situation in Eastern Europe had been much worse, with Russia getting more aggressive and US, UK imposing sanctions. In that way, what market has done, first thing, they have sold stocks. However, while announcing sanctions, President Biden also said diplomacy was still available, and it's still available. These avoided markets falling further. Now, with yesterday 1% fall, the broader S&P 500 lost more than 10% from its peaks, and the other tech-heavy Nasdaq has lost almost 20%. But all these are looks like in a bigger sense it's a correction. But market falling from these levels higher, they may put into markets into a bear territory. Now, what market will be looking for? Market will be looking for a Fed policy in coming week, means 15th March, but they will look into inflation data, which is coming on Friday, PC, GDP data today. So not today, it's on Thursday, and this will put up a more path for interest rate hikes. Now coming back to gold, which on a risk aversion saw a 9-month high of $1913 yesterday morning, which acted as a strong resistance. Now it's dealing around $1,900 per ounce, whereas the Brent also traded quite close to $100 per barrel and saw some profit booking. Now both these will act as strong resistance against 1913 on gold and 100 on a Brent crude oil. Now, interestingly, when you ask this question on interest rate hikes, the directors at Regional Federal Reserve, they have voted for rate hikes in the January month itself. Now, these guys are not policy setting, but setting people, but they recommend to Fed to increase to whatever the actions they need to take. And this shows that Fed will be hiking the rates. Now, what happened in Indian market? There was a hefty short covering happened after RBI announced a sell-buy swap on Monday, which indicated that they are preparing to absorb all IPOs related, LIC IPO related flows. Saw the rupee lose more than what it gained on Monday. Spot hit as close as to 75, but now is dealing at 74.65. It's likely to open at 74.65. Market seems to be in a range between 35 to figure with a dollar rupee bearish bias. Now, continuing on the sell buy swap, which had been announced by RBI, Yesterday, Indian 10-year G-Sec yield closed 6 basis higher at 675. The combination of sell-by swap and announcement of a weekly auction by RBI. The earlier two auctions have been cancelled by RBI. Now, all Indian interest rate curves saw upward movement on the same news. We saw 1 year forward points moved higher by 20 basis than previous close to 4.20% per annum. The other things which we can think about is Euro USD saw some good volatility yesterday. First on a risk averagence, saw a low of 1.1286 and moved to 1.1366 on a very good IFO numbers. Now at dealing again back at 1.1320. So yeah, that's all for today. Have a nice day.
Okay, thank you so much, Pankaj. That is good to hear. And I think the markets are operating on a lot of narratives as well as the central bank and the major potentially influencing personalities of the markets. Now, while I have you here, I'm going to book you for something even more interesting that we are soon bringing up. A whole new weekend series where we delve a little bit more on a few of the topics that we see have the potential to shape up things in the future. Now, it's going to be quite exciting, and we want to hear you and your thoughts on LIBOR transition. How about this Saturday? Does that work for you?
Yeah. I would be very happy to share my thoughts on this transition. This is a transition which is changing the short-term interest rate market and overall funding markets for a very, very long term. That will be interesting. We will share our thoughts on this Saturday itself.
Okay, wonderful. I look to hear again from you on Saturday. That's it for today, folks. Thank you.